Hello, everyone. This is Alfonso Moreno from Set and Forget online trading community. And I'm here for the weekly webinar for you, as always, as every week. And on this particular webinar, I'm going to talk about something you might not agree with. And the title is Everyone is Wrong About Earnings. We're going to be talking about earnings releases in stocks because they are really irrelevant to to the direction where price is heading. Okay. So we're going to be talking about why stock earnings releases are not needed, okay, to place high probability trades. We need to focus on price action, imbalances, and ignore the noise of the smaller time frame. That doesn't mean that if we trade the smaller time frame to a scalp, we should ignore the earnings because the volatility exists. Okay, but we're gonna go over that. Okay, so thank you for joining. Okay, there is a little bit of delay between my transmission, my streaming on Zoom towards the YouTube platform. So it might take a few seconds for me to read your message and reply. Okay, so I'm going to go over certain stocks. At the end of the webinar, I'm going to ask you about any stock you want me to analyze. I'm going to see it through the prism of supply and demand imbalances and price action and also earnings. I have prepared a slide. I want to go over it as we analyze price action. So and the first one, which is the promise of this webinar, so I'm going to go, like I said, over real stocks that show earnings, and they are usually not the decision-making engine traders believe they are, because earning releases can create volatility, of course. Good afternoon. Noise, and also excuses to take or not to take the trade, okay? But they do not replace imbalances and the location and momentum and between buyers and sellers. So the big question is, as I always say, do earnings create the move, okay, on a price action, or was the market already showing the move through supply and demand before the headline arrived? Obviously, I believe that the earnings do not create the move. Okay, sometimes they do, but the direction and the bias was already established by the bigger time frame imbalances. Okay, so let me take a look at Meta, for example. We've been talking about Meta for a long time. The demand level here was a little bit wider, played out already, and then it was reached again at demand level at around $590, and it's rallying again. Okay, and if we take a look at the bottom of the chart, we're gonna see only webinar all the time. Okay, and since the last March 2023, okay, we have only had one negative earning. Okay, the rest is positive. So when you take a look at the bigger picture, the price action, Meta platform price today is like a $600 per share. Okay, take a look at this. All this price action, all that. Within all that price action, Meta dropped 20%. Here it dropped 36%. Here it dropped 34%. So if we take into consideration earnings, and there was only one negative one, okay, why did Meta drop all that with positive earnings all the time? It doesn't make sense, isn't it? When we take a look at the bigger picture, earning releases and stocks fundamental analysis is ignored. We don't care about it. We just need to be able to read price action, okay, and supply and demand and the bigger picture. Obviously, if you are using the 50-minute time frame to place a trade, then the volatility caused by earnings releases could blow up even your account, okay? So if you trade the smaller time frames, just don't trade prior to, during, and after earnings releases, because this spike in volatility could really hurt your account, even blow it up. Okay, so yeah, they don't create the move; they provide liquidity. Sometimes they create a move. Okay, and we're going to see examples. HHMed, good afternoon. So by taking into consideration this particular stock, okay, which is one of the most liquid stocks in the world right now, Meta, like I said, only one negative news, and the negative news happened here that provided the help. It helped Meta platforms to drop the imbalance, and then it played out, okay? And then positive, demand in control rallies, positive demand in control rallies. When we get negative news off demand, it usually rallies. It doesn't matter. Earnings do not care about, they do not take into consideration imbalances. Imbalances don't care about earnings. They are like fighting each other. They don't care. They don't even know probably that they exist. Sometimes earnings create imbalances, sometimes they don't. Okay. So every quarter, okay, we go to the daily time frame. Every quarter, millions of traders, maybe that is an exaggeration, stop everything, their lives, because what they're doing and waiting for the earnings releases, like the last one in the 29th of April 2026. Okay. And they are like waiting for divine, let's say, divine intervention. So they study earnings forecasts, analyze expectations, revenues, estimates, EPS, earning per shares, numbers, management guidance, the new products, breaking news, newsletters. I mean, do you know what I'm saying here? That's insane. I mean, nobody is able to compile all that information to make a decision. You are adding layers and layers and layers of difficulty, of complexity. Okay, so because most traders are trained to believe that better earnings should push stock higher, but that doesn't happen. Almost all the time, the opposite happens. Bad earnings should push it lower. No, but when we have supply and demand in control here, negative earnings here on Meta doesn't mean it's going to drop. It usually means it's going to rally. Just the opposite. And I could show you hundreds of examples. We're going to see probably some of them, okay, while we go or we analyze stocks, okay? So you will never hear me say, okay, the earnings were positive and then let's go buy, let's go sell. No, never. You've never heard me say that because I don't use it. The rules that I came up with to create the courses and the education and my trading strategy for stocks and forex and cryptos is based on testing throughout the years without, I mean, disregarding news, earnings, analysis, fundamental analysis and all that. So why am I going to use it now? Okay, I know that after a very strong rally, I need to wait for the pullback. So why do I care about the positive news after a strong rally? We are waiting for the pullback. So positive news, okay, probably rallied in smaller times a little bit, okay, and then it dropped. Where? To the demand level we're waiting. Negative news helped the dump, okay, and reach the demand level. So the news in the middle, they are useless. Everything is already priced in the chart, okay? So the stock market reacts to expectations, the expectations of the big boys, and even you and I, the retail traders. It reacts to liquidity and positioning, and a great report, positive earnings release on Meta platforms can still be sold aggressively if price is sitting in supply, or if it is the good news are we're already priced in. Also, when we take a look at the weekly time frame here, we had a weekly supply level at the top. We've got another supply level over there. We discussed this in previous analysis. So what happens? Price here positive, rallies, breaks all-time highs, then all these stock breakout traders start to buy. And then what happens? They lose, obviously. After a very strong rally on the monthly, we wait for the pullback, and that is the entry. So new supply levels. So supply level on the weekly takes control right there, negative news. So supply, which is sell, okay, with negative earnings releases, the only negative release that happened on Meta platforms since 2023. In 3 years, okay, no negative earnings. And where does it happen? It happens at supply on the weekly after a very strong rally on the monthly, right there. Well, there, sorry. Yeah. So what happens? Price drops strongly into the demand level where we were going to buy. And we have been talking about this demand level on the weekly, which is in control now, and we're expecting Meta to rally higher, regardless of the earnings. So when we take a look at the earnings release here on Meta, which was here, okay, back in the 29th April 2026, what happened? Positive earnings, okay, positive, okay, and then price, okay, drops almost 8%. Does it make sense? No, it doesn't. Okay. So why, if we had positive earnings, did Meta platform stock drop 8%? Well, there was nothing supporting any longs or shorts up there after a very strong rally, which is created this weekly demand level. The earnings release happened over here after a very strong rally, 1, 2, 3 large candlestick. We are expecting this, so the negative news was just the catalyzer for Meta Platforms to drop where we want it at the weekly demand level, and that is playing out right now. So you can do whatever you want with the earnings releases. Everything is already priced in. Or don't you think that all these earnings releases, obviously the company, the CEO, all the EOs on the company and the major analysts, they already know what's going to happen, okay? And they're already positioned. By the time you hear the news, you're already late, my friend. So you don't have the context. Oh, you need to find another stock strategy to place trades, and supply and demand is the one that makes more sense, at least to me. Okay, there are many others. So this is what happens. So this is what most traders believe. So what fundamental analysis focuses on, okay, they study the business behind the stock. So are you telling me that you have the capacity and the skills and the studies and the career to study if a business is good enough to buy? I don't have the capacity, the skills to do that, okay? And if you tell me we have it without studying that, I don't think I'm gonna believe you, okay? What you will know probably is that what happens, what is an earnings, what is the revenue growth, what is the cash flow, the dividends, the margins, market share, all these things. And then it gets more and more complex. So I don't know what they mean, actually. I don't know how to interconnect all this to make a trading decision, okay? So the thing is that no matter how good you think you are, an analyst you are, okay? I am not a good fundamental analyst. I don't care if I am not, because I am a very good technical analysis with supply and demand. So I just don't care. I don't give a shit about it, okay? So in active trading, especially when we are reading price action, supply and demand imbalances, and that's what I'm doing, and adding fundamental analysis creates another variable to worry about. That was not part of the rules I tested over the years, and whose trades I am sharing at the trading community and doing these webinars. So why am I going to use now fundamental analysis and earning releases when I know all these EPS, quarterly earnings, revenue growth, and everything about Meta Platforms is already priced in price action? I mean, I don't care what they say, what they think, what products, Meta Platforms, they are launching new glasses or new AI that is going to conquer any sector in our civilization. I don't give a shit about that, okay? I just know that there is a very strong rally on the weekly, and I need to wait and then buy. That's it. Obviously, we need to put things into context. I have already put everything into context. That's why I'm saying buy, okay? To buy. So funny how this works, isn't it? Because this is it. So if we take a look, for example, the major stocks, Tesla. On Tesla, we've got the monthly demand level. We've been talking about Tesla for many, many months, okay? And we were doing a webinar when Tesla reached that weekly demand level, monthly demand level, and then Tesla has already rallied 34%. Did I take into consideration earnings? Nope. Why should I? I shouldn't. I shouldn't take it into consideration. Why? Because we've got a strong imbalance over there and we're just waiting for the pullback. But hey, Alfonso, I need now to wait 6 months to buy Tesla. Yes. If you're going to buy high probability, you're going to buy after the breakout happens, an all-time highs on Tesla. Okay. What do you get out of it? A huge loss. So up to you, my friend. Very strong rally on the monthly. I need to wait for price to reach that down there. After 3 months, it does, and it plays out really, really well. Here, new imbalance, price rallies, drops down there. 6 months, rallies. It's been rallying for 2 months and a half. Played out really well. Okay. So did I take into consideration the negative earnings reports on Tesla stock here, there, positive, negative, positive, positive, negative? I mean, I don't care. But if we get the combination of a strong demand level on the monthly plus positive earnings or even negative earnings, expect a rally. So that is exactly what happened. The demand level on the right here was already in control, and then a few days later, the earnings happened on the 22nd of April 2026. And what happened after the positive earnings? Price dropped. Okay, price dropped. It didn't reach the new demand level there. Oops, what happened here? Right there at the bottom. Okay, more or less there. Fell short. So what happens now? Positive earnings happen with demand in control. It's not that the earnings created the demand. It's that the earnings price dropped a little bit and then it continued to rally. Okay, ignited by the positive earnings. The next earnings will happen next month, probably in July the 22nd. So I don't care what's going to happen there. I don't care if Tesla is at the top. I don't care if Tesla stock is at the bottom. I just care that the monthly demand level is in control. It's long bias. If it happens over here, obviously I'm not going to buy. Why? Because this is the classic resistance, okay? Unable to close above these highs at about $457, $58 per share. Well, it happens up there, like there. I was saying this on the last webinars. I mean, after a very strong rally with this impulse, don't buy. It's going to drop. And it dropped. Where? To the weekly demand level there. And it's rallying and playing out. So positive earnings here helped price to rally, creating an imbalance, and then price is rallying on Tesla again. So this is how it works. So if we take a look at the next slide, so it's that most traders assume, okay, it's like a hidden assumption behind earnings and trading. So the assumption is obvious. The market keeps making it look silly, okay? So the hidden assumption behind earnings trading is the positive news should attract buyers and negative news should attract sellers. That's like quite simple, isn't it? Okay, positive news, I'm going to buy. Negative news, I'm going to sell. But you are ignoring imbalances, you are ignoring price action, you are ignoring multiple time frame analysis, you are ignoring context, location, overextension. I mean, supply and demand really, because if something is very, very expensive, like here, price rally very strongly and Tesla rallies like about how much? Like 60%. I mean, why should you buy Tesla stock? You should wait for Tesla to be cheaper. You wouldn't do that in real life when you want to buy a car, a house, a pair of shoes, trousers, wine, meat, anything. If you know it's very expensive, you are not going to buy, my friend, and don't tell me you will. Unless there is some very important event you can fail, and then you will spend any money you have to spend because you need to impress a woman, your boss, someone, or a situation. You are not going to spend, I mean, like 50% more on something if you don't need to. I mean, and don't tell me you will, because you won't, okay? So that's human nature. We want the cheapest thing, the deals, the bargains, okay? But when it comes to stock, we just ignore everything. We just, okay, let's do intraday scalping, and I'm going to make a lot of money out of it. Nope, you're going to fail. Oh, all-time highs were broken on Tesla, so I know a very nice stock breakout strategy that allows me to buy after the breaks if I see certain patterns. And then what happens? Price drops. You lose. Why? Because we are waiting for price to drop down there, but since you are trading the smaller time frames in the 1 hour and in 4 hour, and the daily is like the top time frame you are paying attention to, it's like, obviously you miss the bigger picture, the context, the trend, you miss every single thing that is important to trading. Okay? Good morning, Mike. So the thing is that that is the, like I said before, like an assumption, the hidden assumption, and this is the great earnings illusions. That good news, okay, stock should rally, isn't it? Why? Because sometimes stock drops. Bad news, stock rallies. No, it should drop, okay? If a company misses expectations, headline look ugly, analysts downgraded, and social media start writing the obituary, okay, this is the end of the stock for some time, and then the stock rallies. What the hell is that? Okay, and that happens a lot when there is a demand level in control, okay? Negative news, for example, in Tesla, and then what happens? Demand was in control. Shouldn't Tesla drop with this simple assumption that great earnings, okay, means that price is going to drop, as explained before? Bad news, sell is too simple, let's sell. No, we have demand in control. Here, what happened? That negative earnings release on Tesla helped Tesla, was probably the catalyzer between, I mean, amongst other things. Which thing? I have no idea. And do I care about it? Nope, I don't care about it. I just care that this is the strongest demand level in years, and I want to buy here. And here again, and that happens. And then on the weekly again, and it is happening. As simple as that, okay? So, as I always say, I mean, markets react to expectations. It doesn't have any manners, okay? Price does not care whether a report sounds good in English, okay? Or in a way that you can understand, as I said here on Tesla. If you go to another stock, for example, I share this trade with the community, okay? On the monthly, it's like, oh, what the hell is going on here? But on the daily, this is what we have. This is international flavors and fragrances, okay? So what happens? This is an imbalance, a daily imbalance, and it is a pretty strong one, okay? So what do we have here? We have positive earnings. So in this case, what happened is that we had also a demand level right there in control on the daily. So with this demand level on the daily in control, then that was positive news. So these positive earnings on IFF stock helped the stock to create a rally of about how much? 14%. Okay, so price rally. So what happened? And that happened in just 1 day, 2 days. It takes like a week and a half to drop. I share the trading community, and it is playing out as expected. It just played out. If I take this and I use the extension, Fibonacci extension, it rallied 1, 2, 3. It tripled already your investment. If you invested $1,000 or $100, one unit of risk, you already made 3 times the risk. So that is a nice trade, okay? Based on supply and demand and taking into consideration that there is earnings in the news and we have an uptrend. So uptrend gives us the trend, the context. The imbalance with a huge gap give us the location, okay? Price drops down there, and now we get the trend and the momentum, and then we get a trade. Play it out with 3 times the risk, reward risk 3 to 1. Okay, so this is an example of when an earnings release helps the stock to rally. It is the catalyzer because we have a bigger picture trend to go higher. If we take a look, for example, at Disney, this one was not as fortunate. Okay, it was a very similar scenario on Disney. Okay, we had, as you can see, if we divide the screen in two, I'm going to use here the IFF on the right side. I'm going to use the daily there. Okay, so on the left side, we've got positive earnings release on Disney. Price rallies very similar to what IFF did, okay, based on news. I need to set these settings for latest news, I think. No, that's the latest news. Nope, sorry. Earnings, here. There. So we've got a demand level on Disney, Walt Disney stock. Price rallies strongly, drops down there. I believe it's more or less the same day, as you can see. The earnings release happened 1-2 days of difference. Huge gap. This one plays out, and Disney, it just rallies 1.5 and then it's broken. So can this happen? Of course. But once you are in a trade, okay, a price rally starts printing new highs, the thing you should do is manage your position. Just don't expect this is going to happen in just 1, 2, 3, 4 days. If price action doesn't look that great, at least break even or half your risk. But that doesn't mean that Disney is not a good stock to buy, okay? Because if we take a look at Disney, because we had these positive earnings a few weeks ago, we still have the demand level on the monthly that we talked about a few weeks ago, and we've been discussing also on YouTube, webinars, and all that. So we've got strong rally, price drop. It took like 9 months to retrace, and then it is rallying. What happened with the earnings? Look at Disney, okay? Since back in May 2023, it hasn't had a single negative earning release, okay? Everything has been positive throughout the years, everything. So what happened? Price rallies, price drops like a rock, like 32%, price rally 25%, price drop 25%, price rallies 54%, all with positive news. So when you take a look at you're welcome, but you are here to look at. So if you use the bigger time frame imbalances and bigger time frame price action when you want to trade stocks, and when you do forecasts and analyze stocks, okay, you don't care about earnings release, and this is the proof, okay, not only this one, but this one on Disney, but thousands of stocks. So why, if Disney had always positive news, it has dropped 30%, rally 50%, drop 30%, 5%, rallied again? Why is Disney doing this if it's always positive? The earning releases are always positive. Okay, it doesn't make sense. But obviously, if you go to the 5-minute time frames, okay, and you go to the earnings release, and you wanted to sell whatever, and imagine you wanted to sell here in the smaller time frames because everything is down, and you wanted to sell around here, and then there is positive earnings or negative earnings, so you get this gap, and you had incurred in a huge loss, huge loss. Sorry. So when you are trading the smaller time frames, you should respect earnings, because the volatility will blow up your account. But if you're trading the daily, weekly time frames, monthly time frames, you don't give a shit about that. I mean, earnings are just priced in, but in the smaller time frames, you are going to have your account blown up. Okay. The news is already priced in. I always say the same thing. The chart tells the story before earnings day arrives wearing a shiny press release. Okay. So institutional buying and selling rarely begins the second a headline. Okay. They don't use headlines when they appear on your screen. They are already positioned way before that. They already have a strategy to accumulate or to distribute on that particular stock. They're not going to be waiting like most retail traders, like waiting on the screen, waiting, okay, it's going to be positive. I mean, 6 analysts say it's going to be positive, 4 are going to be negative. What do I do? Oh, I'm going to wait, I'm going to wait. And then you ignore that demand is in control and you miss the trade. As simple as that, okay? So this is why we want to know where price has already reacted, where supply and demand are created, in this case on Disney, on this monthly demand level, and if supply was absorbed by demand or the opposite, and whether price is approaching a meaningful, a very important imbalance, because you should not be trading against it. Okay, the chart is usually less dramatic than the news, but much more useful. I'm going to read some question here. Sorry, I have a question on Disney daily chart. Once the demand was broken, was the bullish standing range candle responsible for the elimination of the level, or was it the pin bar? This is discussed in the course. I believe you are a member of the community, so ask that in the community. Okay, I believe you are a member there. So we're discussing here not why an imbalance is created and how. This is discussed in the community. Okay, we have this here. So if you are a member, you should know what cost. So if you don't, ask in the community. Okay, so right now we're talking about the bigger time frames on the earnings releases. Okay, not how to draw an imbalance, how to locate it, how to drill it down to smaller time frames, how to place your trade. All that is dealt with in the community. Okay, so as I was saying, okay, and there are weekly webinars also on the community, so you can ask anything about the rules or any trade or any imbalance or anything. Okay, so like I said, I mean, traders use fundamentals as long as markets have existed, obviously, since the beginning of time. And the problem is that today the news is distributed worldwide in a fraction of a second. An algorithm, AI now as well, and rule-based engines can process earnings releases way before any human, you and me and 1,000 like us together, even finish reading the headline. So in a few milliseconds, can separate profit from loss if you're doing like very short-term time frame trading, okay, scalping. We are not doing that, okay? So in the case of Disney, if you are using long-term options, or you are buying CFDs or waiting for new imbalance or whatever, buying is the way to go on Disney. So you want to go to the 1 minute chart, up to you, okay? I'm not doing that. So if we take a look at other stocks like Oracle, is a very important one. Okay, on Oracle, this is what we have. And Oracle, if you take a look at the bottom of the screen, you're going to see red, green. So those are positive and negative earnings releases. So Oracle is not like Meta or Tesla or Disney that where we had everything positive. Here's negative, positive, negative, negative, positive, negative. There's no pattern. Okay. So it's like positive rallies, negative drops. Okay. Positive, it drops. Positive, okay. Here is what matters. Very strong demand level. We mentioned this in the training community many months ago. So demand takes control, positive earnings, price rallies. After a very strong rally, now we're waiting for the pullback. If we go to the smaller time frames, when that demand level took control, okay, there. This is the proximal line for that monthly demand level. There. So what happens? The 10th of March 2026, while that monthly demand level was already in control and we were saying that buying was the way to go, okay, what happened on the daily? We get a black candle, positive earnings, a slight drop, okay? And or maybe the news happened after the black candle, probably it was afterward, and then it gapped up. So what happened? Price rallies, and then it drops, prints a new lows, and it rallies again, new high. So all this is the accumulation process that is happening, as explained here, done by algorithm, by big boys, by hedge funds, by institutions. They just do not buy like huge positions. They just accumulate a little bit to have a better average purchase price. Okay. Best time of the week, top professional. Will you review some forex pairs today? Nope, I'm sorry, but not. I'm working non-stop to be part of the Certain Forget community. No, today is about earnings, and earnings are not available on forex pairs. Okay, there are news, which is the same thing. Okay, like FOMC, the unemployment rate, the interest rate, GDP, all that. But it's the same thing, fundamental analysis. Okay, and the same rules apply. We ignore them when we use the bigger time frames. But earnings releases, which is the title for this webinar, are only available on SOX. Okay, morning, Michelle. So my lens, the one I'm using, supply and demand imbalances. As you can see here is a screenshot of Tesla demand levels that I use as an example. Okay. So when I analyze the stock, and I recommend you to do the same thing, you focus on price action, supply and demand zones, market structure, larger time frame, trend, obviously, location, momentum. I mean, all that is something that you need to. I want to know which size is in control and where the next high probability reaction can happen, as in Tesla, okay? And we have talked about many. I mean, if we take a look like somebody, Agushi Meke Sushoshu, I don't know the name of is your name, but we've been talking on Forex, same thing, weekly demand levels. We've been talking about many Forex cross pairs with demand in control. And it's the same thing. The fundamental analysis applies the same thing. Well, so we've been talking, this is not something that I'm saying, okay, Oracle is playing now. No, I've been talking about this on the community, not here on YouTube, because I'm doing just one webinar a week and I'm trying to teach the basics on this. And so I'm trying to debunk to fundamental analysis. Okay. And as you can see, it's playing out, but on the communities share real time. Okay, so that's why the title for this webinar says that everyone is wrong about earnings. Maybe not you, okay, but before somebody rushes to the comments section of the video with the keyboard already on fire, let me. I have already clarified this. Okay, I'm not saying earnings don't matter. Okay, I'm not saying company fundamentals don't matter. Many people trade them. I'm not saying revenue, profits, APS, management, quality, cash flow, they don't matter. What I'm saying is something much simpler, okay? As we can see here in Oracle. You do not need earnings releases to place a high probability, high quality trade. Like here, if we use the Fibonacci extension tool and we expand this, okay? The width is this, so the stock already rallied 1, 2, 3, almost 4. 4 times the risk. The entry would have been here, the stop loss is slightly lower. So if you invest, okay, if you risk $1,000, you already made $4,000. Okay. If you invested 500, you already made 2,000. You should get out because we've got these strong bearish impulse and we were expecting price to drop. And that is exactly what is going on. So the thing is that if you are patient enough, you buy options, CFDs and all that, you wait for 2-3 months, you triple, you quadruple your investment, okay? So as I always say, I mean, the imbalance creates the move. Now we need to wait. It's not the news or the earnings releases or what you think is going to happen or what any fund thinks is going to happen, okay? Although some of them can manipulate price, okay? The imbalance creates the move, okay? And the earnings report is often just the excuse every stock trader uses after the fact, okay? So, but we don't do after the fact trading here. Price drop here and we are expecting price to rally, and it did. So if we take a look at another important company, AVGO is Broadcom, okay? So what happens here? This is the monthly time frame. If we zoom out, there hasn't been a single negative earnings release since 2020, my friend. 6 years and not a single negative earnings release. But as you can see, stock dropped, 46%, stock dropped 30%. So if everything is positive, why is the stock dropping? Obviously, because there are other mechanics, underlying mechanics that help price rally and drop. And that is price action, the supply and demand, okay, that act as magnets. Like here, for example, strong rally, price takes 3 months, the demand level plays out. Strong rally, we were waiting for price to drop, it didn't. Rally strongly again, and then after a few months, Broadcom stock, AVGO, drops and rallies. And now it has rallied again. It did once, twice, 3 times, 4 times, and it's trying to drop down there. So it's the same thing always. So did I take into consideration the news? No, I know price action here is not good to buy after a very strong rally. Breakout trading, not good. Here, breakout trading, not good. We are waiting for this. So you want to do breakout trading? Obviously, yes, go ahead. Go ahead and lose, okay? So there are rules for breakout trading, okay? But as supply and demand traders, we don't do that. We just patiently wait for where we believe is the next high probability imbalance, which is in this case, in these cases, on Broadcom stock has been there, these imbalances, okay? If you are a new trader, you want to learn how to trade stocks, I mean, I recommend you to focus on imbalances and on smaller time frames, because smaller time frames are like the matrix, Neo moving like very slowly. You can see the bullets coming. But if you use the 1 hour time frame, the 15-minute time frame, the trend can change. Like on the 15-minute time frame, it was down and now it's not down anymore. So it just changes in half an hour, 1 hour. The trend can change every hour. So you don't want to do that. If you are learning how to drive, okay? If you're learning how to drive, do you ask, imagine you are a teenager, okay? And you want to learn how to drive, okay? So, and you have no money to buy a car. So what do? You ask your parents, okay, daddy, can you please buy me a second-hand car? And then obviously he's gonna try and find you a second-hand or even a broken car. Okay, he's not gonna buy you a Lamborghini. Okay, so maybe he will say, okay, I can get you a car. Okay, and he will get you this one. Okay, and now try to repair it, and then obviously this one is gonna be cheap, a few bucks. Obviously, he's not gonna buy you a Lamborghini or a Ferrari for you to learn to drive. Okay, because you are like a very new driver and you probably will crash the car. So better crash a bad car, second-hand car, third-hand car than a brand new car or his car. Okay, Play. We'll try and analyze Play later. Okay, let me finish the presentation, which is about earnings. I have a few stocks to go around, okay, to analyze. So this is what this is one of the I think this is like a chip manufacturer or something, AVGO. I don't care what they do, but it's just after a very strong rally, we are waiting for the pullback, okay? And in stocks like HPE, which is Hewlett Packard Enterprises company, okay, on Hewlett Packard. So what do you think is going to happen right now? I would like to read your comments, okay? What do you think? This is the monthly time frame, okay? For Hewlett Packard Enterprise company, they sell computers, probably servers, and many things related to the IT industry. So when you look at this, what do you think is going to happen? Okay, so very strong rally. We already had this demand level played out, and then the accumulation happened for half a year, and then the breakout happened. So when you take a look at the price action on the monthly, as you can see, negative news, it only happened there in March 2025, then the previous one into June 2022, and the rest has been positive, okay? So there was a positive news right there. Let me take a look at the smaller time frames. Okay, positive news, it just rallied, okay, and created an imbalance here in the daily. But the thing is that when you see this strong rally on the monthly, I mean, buying here is not a good idea. The stock has already dropped 24% in how much time? In a week and a half, 2 weeks, probably, okay? So you see that and look at that after week. If you are a short-term trader, you are doing scalping stocks, even intraday, okay? Do you think it's a good idea to buy shares or to speculate with shares of Hewlett Packard stock now? Nope, it is not a good idea, okay? We should expect this. Can price rally and break all-time highs again on this stock? Of course, anything can happen, but we're not talking here about what could happen exceptionally. We are talking about what happens most of the time. Probabilistically speaking, we should expect Hewlett Packard stock to drop down there. That's it. Can price drop here and reverse at 50% or Fibonacci retracement 62.8 and then right? Yeah, of course. But I'm not using Fibonacci extensions only to draw the imbalances. That's the use, okay? So we are expecting price to drop down there. So is it a good idea to focus right now on Hewlett Packard? Nope, it is not a good idea. Can it react? Yes. Can it rally break all-time highs? Yes. But this is not the high probability trade idea we want. So, okay. So if the next slide says, the title is why larger timeframes matter. The larger the time frame, the less we should care about the little circus playing in the smaller time frames with volatility and the short-term traders, scalpers, and everything. So in short term, okay, we have earnings volatility mattering the most. Why? Because the smaller time frames like M1, M5, 5-minute, 15-minute charts, the volatility created with the earnings release can blow up your account. Okay, when we're doing bigger time frames, swing trading, swing stock trading, context matter more than the headlines. Okay, and when we're doing long-term positioning on monthly, weekly imbalances, large imbalances dominate the story, and the earnings releases and news are irrelevant. So the larger the time frame, the higher the probability is going to filter the noise in the smaller time frame. So they show whether price is reacting from an important imbalances and simply jumping around because the market is digesting another earnings headlines that you got on your email probably. So with such a week on the monthly, can we use lower time frame to sell, for example? You can sell if you want. I'm not going to do it. Okay, I'm not going to do it. Again, I'm going to give you the same example again, okay? And I'm going to show you here some pictures, okay? Okay, so here we have, again, I think you know what I'm going to be talking about, okay? I am a man. I like women. And this woman in particular is my type. I like this woman, okay? So I go out, okay, to an Irish pub tonight with a couple of friends, okay? I go to an Irish pub with some friends there. And I am with my friends here in the Irish pub. And well, this woman is not there. Okay? No women, only men. After watching the World Cup football, where Spain almost lost. But we're watching football, okay? And we want to flirt with a woman. No woman appears. Next day, another match. No woman appears. What happens? Am I going to start kissing a man, flirting with one of my friends because there is no woman to talk to that will fill me, will inflate my ego and tell me, oh, you're handsome, my friend. I would like to date you. No, I mean, so what you are proposing right now, big, is since I need to wait for price to drop down there, I'm going to sell on the way down. So you are, I am assuming, okay, and this is not sexual or, I mean, I have nothing against women or men, okay? If you are a man and you like women, why are you going to flirt with men on the way down? I'm going to patiently wait there because my perfect woman is there waiting for me. Do I need to wait for long? Yes, because love takes time. Quality takes time. In the meantime, there are many other stocks. We have Meta, we have Microsoft with demand control, we have Tesla, we have Disney, we have so many. So why do you want to sell this one when this one is long biased and it is not providing you with a clear setup? Answer that to me, please. Why? Because you are a short-term trader, because you need to feed your ego, you need to make money every single day. Otherwise, you don't feel good as a human being, as a man, you don't feel fulfilled as a man. No, okay? A smaller time frame trading is now paid too. I don't understand what you mean. But I guess you understand what I'm trying to say here, okay? The fact that we are expecting this to happen doesn't mean that it's going to happen. Because expectancy and assumption are two different words, okay? I might have a 90, 95, 100 years expectancy, but I am not assuming that I'm going to live up to 100 years, okay? So, oh yeah, since I'm going to live up to 100 years, I'm going to take all drugs, I'm going to go with men, women, and do all crazy things in my life, since I am assuming I'm going to live up to 100 years, my friend. Nope. I'm gonna be okay. I want to leave all the years left for me well with nice company, nice food, nice wine, but not doing all these things that might get me killed in the process. Okay, and this might get your account blown up in the process. Okay, can we sell this? Yes, but there are rules for selling against the trend, and those are not even explained in the courses. Okay, because otherwise, everybody will want to sell against the trend. So I don't want to even cope with them. So high probability here. You want to sell on the way down. Not my responsibility. Yours, my friend. So let me take a look at play before I continue. So play. Dave, this one is Dave Ambassador Entertainment on the monthly time frame here. We've got a demand level on the monthly that has been tested several times. So on the weekly time frame, we've got nothing. On the daily time frame, we've got new lows. So, well, for now, doing nothing on this one. We've got a 3-month demand level there, but it was tested and now new low, a new low. There is no sign that play will do this anytime soon. So we have to wait. So if we take a look at the earnings releases, okay, we had negative news and price dropped. Negative news, price rallied. Negative news, price rallied. Negative news, price dropped. I mean, no explanation. I mean, there's no pattern that explains this. Okay, the earnings are useless. Okay, yeah, I'm not. You said you are right. Let's wait for the demand level. I mean, I'm not right. I'm not wrong. I'm just saying what is the high probability. And the thing is that humans, okay, humans don't know or can't think. Our brains are not prepared to think in probabilities. It's not. I mean, we just want our brains solve problems, okay? So we've got a problem. It means that our brain is right at the peak of a mountain And our brain doesn't like to be at the top of a peak. Our brain wants to be on the right side of the slope or on the left side. It doesn't want to be at the top in indecision mode because our brain are designed to fix problems, okay, not to maintain the problem. So the thing is that if you know that, if you know how your brain works, you should take advantage of that, okay? And since most traders don't think in probabilities, then you are going to start thinking, okay, I'm going to sell on the way down on Hewlett Packard. I'm going to sell all the way down because I need to fill this filling. I need to feed my ego with something because I haven't been able to find any other stock. But I already showed you Disney, Tesla, Microsoft, there is Meta, etc. There are many. So why? I mean, do you have any in particular interest in buying or selling this stock? Why? I mean, I don't know. Maybe you have some connection with them. I don't know. But right now, buying is not a good idea. So play is not right now. My doc is not a clear buy right now. Probably will rally, but right now it's not showing us anything. Okay. So sorry. So as I explained before, with IFF stock and Disney, earnings are often the fuel, okay, the catalyzer, not the driver. Okay, the earnings release on a stock like Disney or Meta or Tesla can accelerate a move, or as we saw before on Oracle, if it happens at demand and a large area demand, that is the catalyzer, that is the fuel. Okay, it is not the driver. The driver is the imbalance. Price is rallying because the imbalance is in control, not because there is positive news. But if the driver gets enough fuel right at the right location, okay, then we've got the fuel and the driver together, and that propels the stock to very high levels. Prices rally because both the fuel and the driver are cooperating and they are located at the right spot. Okay, so earnings can accelerate an existing move, creating temporary volatility or give the crowd a public explanation. But we don't want I don't want to be the crowd to and demand a public explanation. I just know there is a demand level over there, very strong. I don't care about news, but if it happens that we get positive news at demand level and we get both the fuel and the driver together in a trend with a very strong imbalance, the right location, right context, after a very strong sell-off, it's like one-on-one trading. This is a great trade, okay? Supported by a very basic fundamental analysis because we have the fuel and the driver together. So they can pour petrol on fire, okay? But the fire had to exist. The fire already exists in the form, in the shape of a huge demand level on Oracle. So you want to learn how to trade stocks, okay? How to trade Oracle, how to trade indexes. Wait for one of these imbalances to take control and then take advantage. As before with HPE, isn't this similar to what happened on Oracle? Yes, it is similar. So why you want to sell? Okay, there. Oops, what happened? On Oracle, oops, on Oracle, price dropped and even ignore whatever we had here in the multi-time frame, and then price dropped heavily down there. Okay, so as I was explaining there, both the fuel and driver together, that means location and momentum, that is perfect. We're going to have temporary volatility with the earnings. We are going to have emotional reactions to that volatility and those earnings. And we're going to have fast spikes and gaps in the smaller time frames. And then, and only then, after price is moving up, you are going to start hearing about the convenient explanations, okay? So it's after the fact, but we needed the driver, and it's there, the earnings releases, where was the catalyzer and the fuel together, they made this possible, okay? So why I do not add earnings to the rules, okay? I said that already. A clean trading process beats a clever looking mess, okay? So I have built the supply and demand rules without using any releases or EPS prices or revenue forecasts. I don't even know how to do that, okay? Analysts upgrade. So some analysts decide to, okay, I'm going to upgrade this stock to level whatever. Okay, why should I know that? Why does it matter? Okay, is everybody waiting for that to happen? If you and 2,000 traders, 10,000 traders like you are waiting for that upgrade and to buy, price is already, all this is already priced in because the analysts already knew that was going to happen. So every extra variable gives traders, you and me and any trader, stock trader, another reason to hesitate, to overthink, and to override the chart. Like here, okay, I'm waiting for news, I'm waiting for this, I'm waiting for that, and everything is negative, negative, negative. Okay, okay, I'm gonna positive news, I'm gonna wait, I'm gonna wait, I'm gonna wait, and then you just focus on another stock and you miss the trade. Okay, so because most stock traders are trying to predict short-term movements anyway on the way down or on the way up, or medium-term market direction using information that millions of other people already have. If you have the information that millions of other people have, that information is already useless. Because if that information is known by everyone, what is the use of that information? Okay, if you were the only one that knew about that information, then great, you can use it to your favor. But if everybody knows it, and you are in a newsletter with a delayed in the email hour when you receive the all that, I mean, everything's already priced in, okay? So the edge is gone once everybody knows what's that news, okay? Because everybody knows the information, so you have no edge. But the time the earnings release is released, and the screen institutions, algorithm, hedge funds, and market makers, and everyone, okay, half the planet has already processed it. Okay, sorry. Sometimes those two words together are a problem. So if we take a look at another one, for example, let's take a look at one that caused a lot of hype many years ago with a short squeeze. Okay, so this is GME, GameStop. Okay, we've got a demand level here in the monthly, and we're waiting for GME to drop down there, but it's been doing nothing for, I don't know how much, for since July for 2 years, doing nothing. Rally drops, rally drops, rally drops, rally drops. So we could consider this support, unable to close below there. So support, and at the top we could consider that resistance. So price has been trading in this range for 3 years. Okay, 2 years. How much did I say? 2 years. Every time price dropped to the bottom, it rallied. Every time dropped to the bottom, it rallied. Will it rally now again? Well, in the smaller time frames, we do have a demand level there. Okay, which was like this. Already in control, dropping, new low. So will it rally again? Who knows? But again, we've got here GME, GameStop stock earnings release, which was positive. What was positive the 2nd of June 2026. Okay, so that propelled the stock to higher grounds. With the open was here, the close was there, 10% rally. Okay, so it dropped down there, it rallied, and now it's printing new lows and new lows. So it's a little bit tricky because when you take a look at we also have, I think, we have demand here in the weekly too. Okay, so the larger time frame imbalance is down there, but it's already reacting to the weekly. So we need new imbalances here. I use the Thick Me movie about trash. I should have just watched a documentary instead. I haven't seen that movie. Okay, GME might rally on November 19th when GTA 6 releases. GTA should be like Gran Turismo or something like that game, maybe. I remember a game called Great Tourism, Gran Turismo, or something like that. So we'll see what happens. So, but as you can see, positive news for 2 years, okay? The only negative news is here after a very strong rally, as expected. Positive, negative news, price rallies after 2 months. So news, earnings releases cannot be used on this one. We don't know. So will that new game propel the, make the stock rally? No idea. I don't use that. I mean, if I am going to base my predictions and my trading on the release of a new game, I'm in trouble. So that means that I should also base my decisions to trade on meta based on the products or on earnings per shares or anything like that. Grand Theft Auto. Okay, 6. I haven't played a game for ages. I was really good with games, but that was many, many years ago. So this is GME. Okay. If let's take a look at another one. Okay, like FedEx. This is going to be the last one, okay? So what do we have on FedEx? This is what we have. On the weekly time frame, okay, we've got, as you can see, the earnings releases, negative, price dropped a little bit, positive rallies, positive rallies, positive rallies, positive rallies, okay? We get new demand levels on the weekly, no pullback. This one here, pullback, another one, no pullback, okay? So we go to the monthly time frame. And what do we get here? Let's delete all the boxes. So we've got this, okay? This is the strongest demand level in a long time. So the demand level here, we actually was expecting price to drop there, but just rallied again and rallied again. So when we take a look at Oracle, let me do this. Let me go to the left and use Oracle on the right side. Okay. It's not the same, but you're going to understand what I'm trying to say here. Okay. So very strong rally. Okay. Very strong rally. We've got these engulfing patterns here. See? Engulfing pattern here. It rallies. It looks like it's going to rally forever and ever. And then what happens? Price drops to where? The demand level. So could this happen on FedEx here? Yes. That's the higher probability in a few months. Okay. But in the meantime, we still have these levels of demand that could hold price temporarily for a few months, okay? So this is becoming very aggressive to buy. Why? Because after a very strong rally, we are expecting the stock, in this case, FedEx, FDX, to drop lower. So what happened on Oracle? At the top, we had a very strong imbalance here, okay? Was pretty decent. We have another one here, okay? So which are very similar to these two. What happened with them? Eliminated. Why? Because, I'm sorry, we were waiting for price to drop to the monthly. And it did drop to the monthly. As expected, eliminating the smaller time frames imbalances. And the weekly is a small time frame if you compare it with something bigger, which is the monthly. Okay? So here, I focused on larger time, and I recommend you that you focus on larger time frame context, the quality of the imbalance, market structure, and location before you place a trade, because when earnings actually matter is when these imbalances are in control. The rest, when you trade minutes and seconds, intraday breakouts and everything, they are irrelevant, okay? So what do? I check monthly, weekly context, the strongest supply and demand levels, the quality of the departure, the reaction after earnings. I do that just to show you now what's going on. I don't take a look at earnings. Okay. The goal is to prove that fundamentals never move the markets. They are just a fuel once the driver, which is the demand level, is in control. So, so you want to look for good report, okay, expecting that price will drop. That's what is going to happen, okay? Good reports doesn't mean that price is going to rally. It usually means that it's going to drop if there is a supply level in control. Bad report, price rallies. It happens because we have demand in control. The headlines confirms later, after the fact, okay? So the bottom line is that stock earnings releases earnings reports and fundamental analysis are not useless. Okay, they are not useless. They are simply not required as supply and demand traders to make a trading decision. Okay, trade what you see, not what the headline tries to sell you, because they are manipulating you. Follow the imbalance, respect the larger time frame, and let the chart do the taking. Okay, the talking. It is usually less noisy and much better. And if you are interested, I have courses. You can become a member of the community, and there is also now a 50% limited offer for all the courses with the trading community membership already included in it. So, as I said, this is today's webinar. Next week, we're going to talk about many other things. Hopefully, the earning releases fundamental analysis is clearer right now. They are not needed to place a trade, and you should ignore fundamental analysis and earnings reports when you trade stocks, unless you are trading the smaller timeframes and you're doing scalping and intraday, because that can the volatility of the smaller timeframes during before, during, and after the earning release can blow up your trade. It might even blow